So last three adjustments on this question. So 8, a check for 700 was received in respect of a debt of 1200 previously written off as bad. Debtor wishes to continue trading with Mullen and they're going to pay the remainder within 1 month. So entries here. No entries made in the accounts, so that check of €700 is going to go into the bank account. So when you receive a check, it goes into your bank account. So that's what I'm going to do. Just be careful. Most of the time with these questions, the bank is over here on the credit side, so it's an overdraft. So it's very easy to say, I'm receiving money into my bank account, so I'll just add it onto the bank balance. But that's actually a negative bank balance. That's an overdraft when it's over there on the credit side. So that's 7,300. It's a negative balance basically. And then you have a check received of 700. So you're going to add that €700 on and 69,600 is bank balance. So that's balance sheet. That's current liability because it's an overdraft. What else is happening here? So a debt of 1,200 previously written off as bad. So if you write off a bad debt, you put in an expense, bad debt written off. So I shouldn't have written that debt off because I'm receiving the money now, so I'm reversing that expense. So you put in a bad debt recovered of 1,200, and that is P&L, other income. And finally, the debt is 1,200, you received 700, so there's another €500 there. Debtor says that they're going to pay you that €500, so that is €500 you are owed by a debtor, so that gets added on to the debtor balance. So like the 1,200 there would have previously been in debtors because it was money owed to you, and then you would have taken it all out when you wrote off the bad debt. So €700 you have actually received. It doesn't need to go into debtors because you received the money, but that other 500, they're saying they're going to pay you within a month, so that's money you're owed by a customer, so that goes into debtors. So my debtors balance here is 7,500. So plus this 500 is 71,000, and that's balance sheet current asset. Now, 9, no record has been made in the books for goods in transit on the 31st of December 2016. The invoice for these has been received, showing a recommended retail price of 16,000, which is cost plus 25. So the selling price there is not something we put into our accounts yet. So we only put the 16,000 in when we actually sell these goods. Okay. At the moment, we have purchased them and they're on their way to us. Because they're on their way to us and we have purchased them, they should go in our accounts. Okay, so we're going to put them in a couple of different places in our accounts, but before that, we need to figure out what the cost price is. So the 16,000 is cost plus 25. So let's figure out what the cost price is before that. So that's adjustment 9. So selling price is 16,000, and I'm going to divide that by 125 because cost plus 25, and then multiply it by 100. And that's going to give me a cost price of 12,800. So that 12,800 is the number that should be going to my accounts now. The 16,000 will go in as sales when I eventually sell it, and it'll be a debtor or it'll be bank received. But the 12,800 is what I purchased it for, and that's what it should go into my accounts as now. So that 12,800 euro is stock that I'm purchasing for resale, so it goes into purchases. Okay, so purchases I have already adjusted down here from the disposal of asset one, the check that was put in by mistake. So 506,500 is my purchases figure. So I've said 506,500 going into trading account here. Maybe just cross that off or something, just so when you're actually filling out the accounts, you know it's not that 506,500 you put in. You have readjusted that. So 506,500 is the purchases number. And this 12,800 is another 12,800 I'm purchasing. So I add that on. And my purchases number is now 519,300. So that is trading account. Now, what else? That 12,800 is on its way to me at the end of the year. There's no indication in that adjustment that I have paid for those goods. So I must owe someone 12,800 for those goods. So I've purchased them for 12,800, but I haven't paid them yet. So that's creditors. Again, creditors I have adjusted already. Yeah, so 7,400. So again, that's not the number I'm going to put on the balance sheet now, so we cross that off or something. So 7,400 is my creditors number. And I owe another 12,800. So that is 83,200. So that's what's going on balance sheet. Current liability. The last thing then, that's goods in transit on the 31st of December 16. So you own those at the end of the year. So that is trading stock you own at the end of the year. So that should go into closing stock as well. So you're going to add it on to closing stock. Closing stock is again something I've adjusted already, isn't it? Yeah, in the very first adjustment because of the damaged stock. So 75 is going to be my starting point here. So closing stock. $75,000. So plus 12,800. And then that's going to be 87,800. And then closing stock goes in two places, the trading account and balance sheet, current assets. And finally, goods taken by Mullen for own use during the year were not recorded. These goods had a retail value of 4,800, which is cost plus 20%. So taken for their own use, that's drawings. So when the owner takes goods out of the business for their own use, that's drawings. So that's going to go into drawings. The other place then. So just be careful here. Very tempting to take that out of closing stock, but it happens during the year. Closing stock only kind of comes into being on the 31st of December at the end of the year. So if you take stock out of the business during the year, it's purchases that you adjust. So what we're going to do with this is we're going to take that out of purchases and put it into drawings. Just like the last one, it's giving me the retail value or the selling price. It's the cost price that would have gone into purchases, and then Mullen isn't selling that those goods to themselves. They're taking them out at cost price as well. So that 4,800, which is cost plus 20, you need to strip that 20 out to get back to cost price, and then that's the number that we're going to use. So adjustment 10, I'll go up here. The 4,800 divided by 120 and multiplied by 100, so that's 120%. So divide by 120, multiply by 100. That is €4,000 cost price. So that's what I'm going to take out of purchases. Again, purchases I have adjusted a couple of times already. So I'm starting with 519,300. And that's coming out of purchases because it's not purchases of goods for resale anymore, because you are not reselling them. You're not selling the goods. The owner's taking them out, so they come out of purchases. So that's 515,300. And that is what's going to go into the trading account as purchases. And then the other entry is drawings. Might have drawings already. Yeah, 15,600 already there in the trial balance. And then that 4,000 goes into drawings. So that is 19,600. And that's going to balance sheet, and drawings goes right at the bottom as financed by. So a little bit all over the place in terms of where I put all the adjustments and laid them out, but that's all the adjustments done